Hello, everyone. Excuse me. How you all doing out there? Hope everybody had a good Monday. We're a day into the week already, and we had to move this live stream a day ahead because Singapore was celebrating its National Day. So glad you all could make it out here. U trips for free. Aloha. Appreciate that. If you guys can, just give me some feedback as to the audio for you folks, if it's coming in okay. We're about a minute out still. Anna, how you doing? Seymour Rivers, James Richter. Yes, let's do this. Here we go again, right? Joel G. Yeah, gold is getting some support, which is good. We're seeing silver trying to hold that $29 range. It's kind of difficult still for silver, but I mean, I think it's going to consistently push upwards and beyond. RR, how you doing? Okay, sound is good. Appreciate that. Let's see, Roger, where have you been? If it's me, I've always been here. Okay, but we'll get started in just a bit. So let me go through a few more checks and we'll get things going very shortly. Thanks. Hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. And this is our live stream where anything goes. Sometimes you get the technical difficulties here and there. You get the guest or the host difficulties here and there. So just want to thank you all for being here. Hope you all had a great weekend and Monday. As I was mentioning before, we moved it back a day because we were celebrating National Day here over in Singapore. So quick hellos. Ralph Steiner, how are you doing? Joseph Jones, Olaf the Mighty, first time I've seen you here. Welcome aboard. Nice name. Hosta, first time as well. Kawi, Kanyakoa, how you doing? Polynesian Pip, how you doing? U trips for free. How's it going? Hang on. I think we're gonna have Gregor Gregersen on. I think he's already here. Hang on. Okay. Yeah, we're gonna have Gregor Gregersen join us, so we'll skip over to him now. Let me see if I can bring him on. Okay. So Gregor, how you doing?
I'm doing good, thank you.
Glad you could make it. Are you at the office or are you in the vault today?
No, I'm at the office.
Office, okay. Yeah, so Gregor is going to be joining us. Well, he has joined us, and we're going to go through a few topics that have been on our mind over in the shop, and we wanted to bring it forward to you folks because I know it's been on your mind as well. So, Gregor, welcome aboard. Brief intro, if you could, for people who may be seeing you for the first time.
Yeah, so I'm the founder of Silver Bullion and the Safe House. Silver Bullion is essentially we buy, sell, and store gold and silver in Singapore. We also collateralize gold and silver through peer-to-peer lending systems to basically allow customers to lend to each other. We've sold about 850 million Singapore dollars. That's about 600 million US dollars worth of gold and silver since we started about 11 years ago. And we're currently storing about 450 million US dollars for our customers. And we have done peer-to-peer loans of about $120 million. So it's become relatively sizable. And SBTV, that you're watching, that's also part of essentially Silver Bullion. So yeah, and the whole business basically started as a way to protect people from what we call systemic crisis. Systemic crisis meaning, say, hyperinflation, mass bank failures, currency crisis, and other black swan events like this. And basically, we specialized in dealing with critical situations and making sure that our customers and our bullion is protected in those cases.
Okay, yeah, well, we're glad we could get you back on. I know it was a bit of a quick turnaround, but things have been pretty volatile with both silver and gold. So we wanted to get your opinions on a few things again. So let's get started with some Q&A. And if you guys have any questions out there, just go ahead put in the comments, and we may forward that to Gregor as well. One comment, someone was asking about the gold silver ratio. So if we could, what is it? What does it signify, and what has happened to it in recent weeks?
Yeah, so the gold silver ratio is basically the ratio of gold, think of it like gold coins versus silver coins. So throughout history, the ratio of gold to silver is about 16 to 1. That's what it used to be for many centuries, and that's what the natural ratio seems to be between gold and silver, about 16 to 1. But starting in the last century, silver basically has lost a lot of value compared to gold in this ratio. And so this ratio has been going up. And throughout the last 40 to 50 years, it's been going back and forth between around 50 to about 80. If you go to a homepage, you will actually have some gold silver ratio charts. You can click on it and you can see in details how this works. You can even make your own trading strategies by saying, I'll be buying when it goes to 80, I'll be selling when it goes to 50, and so on, and see how that would have worked out. But the basic idea is that the gold silver ratio will tell you which metal is expensive or cheap relative to the other. So, at least based on the last 40 years or so, we normally would say that silver is cheap if it is approaching 80, and you should definitely switch into silver from gold if you want to be on the value side of these metals. And silver will be relatively expensive if it starts hitting 50 or 45 or so. So that's when you should be switching away from silver and go back into gold. And if you would have done the simple 50-80 formula over the last 40 years, you would essentially have gained 4 times the amount of metal you would have. So if you would have started with 1 ounce of gold and you would have applied this formula since 1985, for example, you would be having about 4.4 ounces of gold now, or silver equivalent, depending on whether you're in silver or gold at any point in time. Right now, you will still be in silver because silver has been so cheap. To give you an idea, just recently, silver hit the all-time low valuation, meaning the all-time high ratio of about 125, meaning silver was just incredibly cheap. That was back when silver was hitting, the 12 and a half, $13 range. Right now, as you're probably all aware, silver is trading around 29, 28, 29. So this ratio, even though gold has increased as well, silver has increased a lot more, which means that this ratio has come down. And right now, I was just looking at it, it's 69.9, so around 70 or so. What that means is that silver is still relatively cheap compared to gold, but of course it is no longer nearly as cheap as it used to be a couple of months ago. And in my experience, and if you look at past times, it's very common for silver to really shoot up, sort of like a jet fighter, and make up that lost value compared to gold very, very quickly, which is what we've seen now. And typically, what happens is that silver will start to overshoot. Typically, you will see silver continuing to do well and probably hit a ratio of around back to 50 or 45. And when it hits that ratio, then you should definitely consider moving some of your silver back into physical gold. And that's why this ratio is important, because it's telling you which metal is cheaper compared to the other one. And typically that means that if metals go up, you'll be doing better if you buy the cheaper metal. And if metals go down, typically what that means is you'll be losing less if they're going down. So either way, you tend to be going ahead. It just means you're buying the cheaper metal compared to the other one. And if you follow this, typically you will just be making one trade every 4 years or so. So it's not really a technical sort of buy and sell today, sell tomorrow kind of thing. It's something which, it's just a common sense thing. You buy the metal which is extraordinarily cheap compared to the other one.
Okay. Yeah, we had a question here where someone is saying, Steph, she's saying racial trading is underrated, meaning I suppose people don't we don't do it as often as maybe we should, or we don't understand it or recognize it as much. How about your clients at Silver Bullion? Do they recognize the racial trading?
Some clients do. I mean, some of our clients have been pointing out, this ratio like a long time ago, which is um, and it definitely pays off. The more you look at it, the more it is almost a common sense sort of thing. Um, you might also consider the fact that it's not just about the gold silver ratio. You can also look at the gold platinum ratio. Uh, Most people will probably know that platinum tends to be more expensive than gold normally. I mean, platinum was always around 30% or more expensive than gold. Right now, that ratio has inverted to the point that platinum is worth less than half than gold. So once you look at it that way, platinum seems very attractive. So if you have money to put somewhere and you have to choose between gold, platinum, and silver, silver was the way to go a month ago. Um, it's still better than gold right now, I think. But platinum is also very attractive. The only problem with platinum is that there have been disruptions in production, and it's actually very hard to get physical supplies right now. Um, so sometimes that means that you'll have to switch into silver if you cannot get the platinum readily. But platinum is also interesting to watch, and it's a similar, gold platinum ratios that you can look over time and see where these metals are. And typically, these things tend to readjust themselves because again, platinum is a lot rarer than gold. So it kind of makes sense for it to return to a bit more historically average rates.
Yeah, it's pretty interesting because we've been seeing a lot of comments from people before where they're asking about platinum. So on your end, are you seeing a demand or customers starting to slide over into platinum?
Yes, yes, we have more people trying to buy platinum. The problem is, for example, when it comes, it's the platinum market for bullion is very small and a lot smaller than silver. And if we've been trying to obtain, say, Heraeus 1 kilo platinum bars, and sometimes it might take 2 or 3 months for us to get delivery of these. And for a dealer, if you basically have to tie up your money for 3 months, sometimes you just prefer to buy, say, silver, which you're able to get within a week or so, um, than to tie things up for 2 or 3 months. And that's basically why it's getting harder to get this, and just the demand of it has been making it hard to get. The funny thing is about our markets is that the price of gold, silver, and platinum, they're not really determined by physical availability of metal. They're determined by future contracts and by leveraged positions of what traders and bankers and so on think it should be. And so what you'll find is that there tend to be discrepancies between what you can get physically and what the price is. And we've seen that for silver for many times, and right now we are sort of seeing it with platinum, where prices are just very low compared to gold historically, but it's very difficult to get them. And because they're low and it's difficult to get, you essentially have these shortages and you have these long delivery times. So platinum coins from the Perth Mint, they tend to be a little bit better. Uh, but of course, the premiums are quite a bit higher, also because traditionally platinum coins, there are just not many being made, and the premium tends to be, quite a bit higher compared to, say, gold.
Okay, so we'll move on to our next question. Uh, the concept of money and central bank money printing, it's on a lot of people's minds, especially with what's going on right now. I mean, the Fed balance sheet is well over 7 trillion. Zombie businesses are growing. The punch bowl for Wall Street has been there for a decade. Relief packages for Main Street, low to 0% interest rates, record numbers of unemployment. I mean, we can go on and on and on, including bond yields across the board at, I believe, historic lows. You kind of get the feeling that money as we know it is scared. Money is scared and looking for a place to hide. What's the What is your concept of money, and should we worry about central bank money printing?
Yes, of course we should worry about that. But I think the way I see all of this, in my mind, the question often comes up. If the Fed or the United States keeps on printing so much currency, and to give you an idea, the M0 money supply throughout the last year, it basically increased by 66%. So we increased the deficit. The last number I saw was by 3.7 trillion this year, and it's probably going to be a lot higher than that. So these are staggering, huge numbers. And the question is, if we're printing so much more money, does that mean our money is becoming worth less? And the way we measure the value of money is through a purchasing index, right? The value of money is the fact that you can go to a grocery store and you can buy a can of tuna with it. And we can measure how many cans of tuna you can buy with $1, right? That's ultimately what the value of money is. Now, if we keep on printing so much more money, why does the price of tuna not go up?
Yeah.
And that's where I think if you understand why it doesn't go up and what might change that to change, then I think you will have an insight which will be more than 99% of all the people out there, because people normally don't really ask that question or don't really have a good answer to it. And the way I like to picture it in my mind, the way I like to explain it, is it all comes down to what's called the velocity of money. And think of it like a dam. You take the Hoover Dam, for example. It's essentially one huge concrete wall which is holding back a huge amount of water. That water exerting a lot of pressure to try and go downstream. And the dam essentially is letting a little bit of water trickle out in order to generate its electricity. Now think of that water trickling out of the demand for physical goods. Think of it like the demand for the can of tuna. Now, you can print or you can add a lot more water to that dam, but as long as it's being dammed up and not trickling down through the dam, it's not going to affect the price of the tuna can. Now, once we add more water, the pressure on that dam keeps on increasing. But as long as that dam is holding, everything's more or less normal. It's only when that dam starts to buckle and more water starts lapping out or water starts lapping out over the top that things are starting to change. And that dam, that dam is the confidence people have in the United States dollar. That's all it is. And so if you look back at the Weimar Republic in Germany in 1923, and I would really encourage you to go and look at the Wikipedia entries for the German hyperinflation back then, because it's really fascinating stuff. But essentially, what caused hyperinflation is not the fact that so much money was printed. That was a precondition. But it was the fact that the people started to say, I have all my savings here, but I saw that the price of tuna can has been going up. And maybe I ought to be buying 2 tuna cans instead of 1 tuna can. And as that is happening, the seller is starting to see an increase for his tuna can demand. And obviously, like anybody who's starting to see a shortage, is going to start increasing prices a little bit. And as prices are starting to go up, more and more people are saying, we had this war and we print a lot of money. Maybe I ought to be buying 3 tuna cans instead of 2, and just to keep some on the side. And that will cause prices to go up more. And as prices are going to go up more, essentially the demand is going up. The seller is saying, I better increase my prices more because there's more demand of it. And as you increase prices, the demand keeps on going up. So instead of a normal market where increasing prices will cause demand to go lower, you start having a situation where as the price goes up, people have more demand of buying the tuna can because they're getting worried that the dollar or the currency might no longer be worth much. And it becomes a self-feeding cycle. And that's all about psychology. It's all about people starting to feel like they want to get the tuna cans instead of keeping the dollars. And that's essentially, in our figurative example, that's water lapping over the dam and starting to increase the flow of water. And if that becomes strong enough, essentially it will cause the whole dam to burst. And that's when you have hyperinflation. And keep in mind, in Germany in 1923, I think, if I remember correctly, from February to November or something like this, um, uh, uh, a glass of beer essentially went from something like one Weimar mark back then to something like, I think, 16 billion marks. And what that means that if you had any bank balance, or you have insurances or life insurances or any type of bond, essentially they became worthless. We had a lot of retirees that committed suicide because they didn't have any money left, and people were burning money, for heat, because literally they weren't worth anything. It became so bad that, and I have of some of these bills. I have this 500 mark bill, and it was just printed on one side because it wasn't worth printing on the other side, the ink, because it will become worthless so quickly, and then you have to create the 5 billion mark bills. And then they got to the point where they started having the stamp, and it was a times 10 stamp. So if you had a 500 million mark bill and somebody had the stamp, it would now be worth 5 billion. So it would become 10 times more current marks. So that's when you are in hyperinflation. It doesn't matter at that point how much money you print, because it's all about psychology. And Germany eventually got out of it by creating a new currency, which ultimately ended up being backed by gold again, because everybody could agree that gold was valuable and it could not be printed. And that's essentially how Germany ended up getting out of hyperinflation. But of course, it caused so much disruption and so much anger in people that then that was one of the reasons why Hitler ended up coming to power, and it was part of the reason we ended up having World War II. But the reason I'm bringing all of this up is because it's giving you a really good insight on how the amount of, and I have a background in economics and econometrics and so on, but it's you can put as many numbers in these models as you want. What ultimately matters and determines everything is the psychology of the people using money, because that's what determines the velocity of money and whether these people want to save the money or whether they're starting to buy those tuna cans. And you have to understand that the Federal Reserve, they believe and they can, decide how much water is coming out of that dam by increasing or decreasing interest rate. But that only works as long as people give a shit. Pardon my French. But if people are not believing in the fundamental, don't have confidence in the US dollar, it doesn't matter if the interest rate is, 500% or not, because it all comes back down to that confidence. So, I have to admit I don't follow numbers nearly as much as, people normally do, because ultimately it is the sentiment, that matters. And as we all know, we've printed so much money, is unprecedented in history, and we are keeping new records on how much money is being printed. And so essentially that pressure behind that dam keeps on becoming bigger and bigger and bigger. And at some point, something is going to give. And, I might be preaching to the choir here, but that's why it makes so much sense to buy silver. That's why it makes so much sense to buy gold, platinum, or other liquid assets, or in some degree maybe real estate or other things, even if we're down at the doldrums. But real assets, because when we're going to have a currency crisis, and I believe it's going to be a when, not an if, then you'll be doing extremely well being in these metals.
Okay, something you said was pretty interesting, where you said the way Germany got out of it was they created a new currency. Do you think
Yes.
that's in the cards for the U.S. or maybe even
Yes.
the entire globe?
I believe, well, that will happen, because So the way Germany did it is the Treaty of Versailles in 1918 when Germany lost the war. And you have to understand that the Allies, England and so on, they decided to borrow money from the population, essentially. And so they didn't really print that much money. Germany, on the other hand, decided, what the heck, we're just going to print as much money as we need to finance the war. And if we win, it's not going to matter. And if we lose, who cares? It's going to be, we're not going to lose. That's basically the ideas that they had. The problem is that when the Allies won, the French and the English won, and the Americans essentially, the Treaty of Versailles required Germany to basically give up almost all the gold, because the French were smart enough not to ask for German marks, but to ask for the gold. And so Germany didn't have enough gold to basically back the currency with gold. So what they did is the government just basically took all the national assets, the factories, the land, the government buildings, and all these things, and said we're going to take all this real estate and all the patents and whatever else Germany has, and we're going to put it into this, think of it like a fund. And basically, the new money which we are going to create is going to be a portion or like a share of this fund. And that's how they get out of the worst part of this hyperinflation. And then once they managed to get some gold on their hands, they basically switched back to the gold. So ultimately ended up being back gold, but because they didn't have gold, they had to go through this intermediary step. Now, in the case of the United States, as you know, the United States nationalized gold back in 1933, and they didn't nationalize it because people didn't have trust in the currency. Actually, it was the opposite. Back then, the currency was backed by gold, and when you have a gold-backed currency, it's keeping the government honest, because as long as you can convert and take delivery of your gold, if people feel the government is printing way too much money, people can just turn in their currency, their dollars, and get gold for it. And that's preventing the government from printing a lot of cash. Now, what happened back then is that the U.S. was in the depression, and they couldn't print gold because people just exchanged the dollars for gold. So they said, well, we want to keep the gold backing for the US dollars, but why don't we just make it illegal for people to own gold? And that's what they did. And so they nationalized gold. They forced everybody to turn in their gold at a rate of, I think it was $18.92. And then shortly thereafter, they revalued gold by about 80% or something like this. And basically, by doing that, they were able to do the equivalent of money printing nowadays. Now, back then, that was a big sin. I mean, nowadays, we are so used to money printing. I mean, just last year, we've printed, similar amounts of money. So it's become normal. But back then, that was sort of unprecedented. But they used this money to at least build infrastructure projects. And, interestingly enough, the most famous projects they built with that money was the Hoover Dam, which we just use as an example. So, and they used it to basically get the economy going and so on, and by creating jobs. Now, what happens then is that they kept on printing more and more money, and especially during the Vietnam War, a lot more money was printed than there were, gold backings. Now, U.S. citizens were not able to take delivery of the gold, but foreign countries such as France and so on, they were able to convert the U.S. dollars back to gold. I mean, that's what the agreement of 1945 was, that essentially you can convert your U.S. dollars back into gold. And so countries like France and other countries, they started to realize that there's so much U.S. dollars being printed that, tell you what, take back the U.S. dollars and give me that gold. And so there was more and more demands to have gold flow out of the United States and back into countries like France and so on. And because of that, Nixon ended up announcing back in '71 that he's closing that gold window, and he will no longer allow foreign countries to exchange their US dollars back into gold. And that's when the United States dollars officially went off the gold standard. I mean, from a citizen point of view, they went off the gold standard back in 1933 when it made it illegal to own gold. But officially it became, completely confidence-based as a currency in 1971. And so why would we see another potential gold nationalization now, since the dollar is no longer backed by gold? Well, because we ended up going on a crazy field trip of printing more and more currency, and it's been going well for the United States. The United States was able to print all that currency, and everybody still uses the U.S. dollar. And I think it reached the peak of its really power, around after the Soviet Union sort of disappeared in the earliest 21st century and so on. But then, that trust started to erode. I think the 2008 financial crisis, has contributed to that. And then over the years, as we just have politicians which believe that running deficits don't matter and printing more money don't matter, and somehow nothing happens if you just keep on printing trillions and trillions of US dollars. As we keep on having these sort of politicians and we keep on doing these sort of policies for 30 or 40 years, we are building up that pressure behind that dam. And we should not assume that people will keep on having confidence in that US dollar indefinitely if we keep on doing that. And we are way past the point of no return. There's no way we can really pay back the debts that have been created along the way. So if that confidence is going to erode, and again, it's all psychological, and it's not just about people living in the United States, but a lot of US debt is held outside the United States, including China. And if enough people are going to start selling back that debt because they don't want it, well, the Federal Reserve can always print more money to handle it, but at some point, again, people might start thinking that we're just printing too much money and start buying tuna cans instead. And if enough people start buying these tuna cans, Jim Richards was pointing out very, very well, I think. He's saying that it's essentially a system, an unstable system, which can go critical at some point. And he used the example of people watching a movie in a theater. If one person starts running out of that theater, people are going to say, well, that's a crazy guy. But if 3 people start running out, then it's a little bit weird. Now, if 6 people start running out, chances are that a 7th person, not knowing why, just because the other guys are running out, is probably going to join them and also run out. And if the 7th person does that, then the 8th will, and the 9th and the 10th, because everybody is going to have a certain threshold when they're saying, I need to join that trend. And that's essentially the danger we are facing. If that catalyst is going to start, then the US dollar confidence might unravel very quickly. And that's really where the threat is. And if that happens, the United States needs to have a valuable currency. If the United States does not have a currency that people accept, then how are we going to pay for police? How are we going to pay for the army? How are we going to pay for governmental services? Everything is going to break down. So the United States, a government, needs to have a currency that people accept. And if people are stopping to accept the US dollar, then the government is going to have to create a new currency which is backed by something that people will trust. And throughout time, gold and silver has been something that people will trust because you cannot print it. And that's why I think the possibility of the United States nationalizing gold again is becoming quite real, because it will be a way, probably the most likely way, for the United States to create a new currency that people will be willing to trust if there is a loss of confidence in the current United States dollar.
Got some great points in there. Um, Coming supply squeeze. We'll get back into hyperinflation just in a bit, but I want to ask you about the supply of silver right now. I understand you have some very good insights regarding silver maples, silver eagles, and maybe we could touch a little bit on COMEX.
Um, well, I mean, what we are seeing in general is recently maple leaf and eagle coins, the premiums are starting to go back up in the United States. But so we are located in Singapore. And what we found since the beginning of the COVID-19 crisis is that it's quite difficult to get metal out of the United States. As a matter of fact, what happened during COVID-19 is, as you might be aware, is that um, the London market, the LBMA market, basically shut down for a while. And that caused a lot of problems for banks because they were essentially buying metal in one place and swapping it with another location. If they couldn't do that, they basically had to come up with physical gold in the United States for delivery for COMEX and other future exchanges, and they couldn't come up with the gold, which means that they suddenly had to pay very high premiums for gold in the United States. And I know for a fact that when you're buying at the distributor levels, the high levels, you can buy gold bars at say $2 above spot per ounce, and these banks had to buy metal as high as $70 above spot during that time, which means that they lost sometimes hundreds of millions of dollars. And that's one of these disruptions. But what it meant is that this high demand, both caused by the banks having to buy and by individuals, rightly wanting to buy gold and silver, has caused a big spike in physical demand, and therefore the premiums have gone up. But it also meant that gold flow, where typically gold flow has been going from, say, London to Switzerland for recasting and then has gone towards Asia. That was also the usual flow in gold coming from the U.S., going into other parts of the world, a lot of it towards Asia. That flow has reversed because the premiums went up so much in the U.S. So gold has actually been flowing back out from Asia, going to the United States in order to arbitrage these increased premiums in the United States. So what that means for us is essentially, if we want to buy maples and so on, we have, instead of paying $1.75, which is what we used to be able to get it at delivered here, we have to pay $4, $4.50, and numbers like that, which makes it quite unattractive. So what I'm trying to do instead is to really source more metal from other sources, especially Europe. So the Britannia silver coins, for example, they're very nice coins, and they're selling at better premiums. So I'm trying to get, or say, Vienna Philharmonica coins. I'm trying to get those kind of coins rather than US-based coins, because whether it's Canada or the United States, just because the premiums are just too high. And it's a similar story for gold. Gold premiums are just higher in the United States, again, because of all this demand. So it's difficult to get metal shipped out of the US in general right now. And you mentioned about delivery. So another thing that's happening is quite a number of distributors or refiners, sometimes the way they get their bullion or make the bullion is by taking delivery from future exchanges like COMEX. And you have to understand that back in the day, back in the 90s, Warren Buffett, he bought a lot of silver, and really a lot of it, and then he asked for delivery. And the exchange, the COMEX exchange and so on, they could not handle that type of volume, and they had to scramble to find enough silver to try and fulfill that delivery order. And they actually had to pay Warren a lot of extra money just to agree not to take delivery. And based on that experience, the exchange essentially put in a lot of limits on how you can take delivery. And it is my understanding that these limits are being reached, this year, meaning that there are shortages on how much, or there are limitations how much bullion you can take delivery of. So if you're buying a future contract in an exchange, in theory, say you're buying a 1,000 ounce bar, and say that bar is normally costing $20,000. well, you can take $2,000 to basically buy the right to hold that bar with a delivery date, say, 2 months from now. When that delivery date comes, you either have to sell that right, which is what people normally do, or you put up another $18,000 and you actually ask for delivery, physical delivery of that bar. Now, because these exchanges only have about 2% worth of backing, once enough people start asking for delivery, they have these breakers which will come in. And these breakers essentially are going to limit how much delivery can be taken. And says not everybody is created equal. The precedence is going to be given to industrial users, especially say companies like Intel or Advanced Micro Devices who are making microchips. They need silver to make their chips. So these type of companies are going to get their silver first. And individual investors are going to be last. Now, my assumption is that refineries that are going to refine, say, silver bars into silver coins or smaller silver bars, they're probably somewhere in the middle. And these guys are starting to have problems taking deliveries. That's sort of my understanding, from the grapevines. And what that means is that again, that shortage of silver and gold is starting to sort of, or especially silver, is starting to trickle up towards the 1,000 ounce sort of good delivery market. Um, Now it might kind of resolve itself, or it might become a big news item, or it might not be. I don't know, but these are all indications. The increased premiums, the difficulty for getting metal out of North America in general, and that reverse flow of gold going back towards the United States. These are all sort of indications that demand for physical is very high. And it's a special case for silver because silver is just ridiculous, has been ridiculously cheap, and is still very cheap in my opinion. Um, that price has to continue going up because there is a physical scarcity for it. And at some point, once you start seeing delivery scarcities or difficulties in the COMEX side, then prices simply have to go up because paper traders can no longer have a low price or push down the price if you cannot take that delivery. Because if I cannot pick up a phone and if I cannot order gold bars at the traded price or silver bars, then what's the point of having that price? That price becomes meaningless. And then the whole game is going to fall apart. So they're forced to essentially push the price up in order to ensure that to reduce demand to match supply. And like any normal market, the price has to go up when you have a situation like this. And I think that's one big reason why we've seen such a big increase in silver prices continuously every day. And again, I think it's probably continue further, and I probably think that silver will probably go back to the 50 to 45 range versus the gold ratio. And that's why I'm saying silver is still cheap compared to gold.
Yeah.
And in absolute terms, uh, I don't have a target sell price for silver because our target sell price for silver or gold would imply that I will be pricing it in the US dollars, and I'm assuming the US dollar is, you know, uh, is valuable as usual. I think that you would want to hold your silver and gold for the long term to see out how this US dollar debacle is going to work out. And that's why I don't really have a target for when to sell. It makes sense to just hold it and see what the psychology and the feeling is and yeah, and basically wait it out.
Okay. Um, some good points there as well. But should people? I mean, considering the things that you just mentioned about the supply, should people be looking to get gold and silver by buying the dip, looking for a lower price, or should they just buy the ship, meaning whatever's in inventory or on pre-order on the way? Should they just be looking at getting that instead?
Uh, I don't try to time the market, short term because I don't know how to do it. Um, if you ask me what's the price of gold or silver is going to be tomorrow, I can tell you that, since 1913, gold has been going up an average of 4.2% per year. Some years down, some years up more. So the way I look at it is uh, buy buy it if you have extra money, which you don't know where to put it. I mean, if you have a fantastic business opportunity, it really then put it inside business opportunity. It depends on your opportunity cost. But if you have money lying around in a bank account, or if you have money in some life insurance, or if you have money in U.S. treasuries, U.S. treasuries are it's the same as the U.S. dollars. Basically, it's a promise to get U.S. dollars back with a very tiny amount of interest nowadays. So if you have money in any of these things, I would highly recommend that you buy gold and silver with it, without necessarily looking too much where you are now, because the way I look at it, we are still at the beginning of the gold and silver bull run. So it's still a good time to switch into physical metals. And I would not try to time it and say, I'm going to buy it next week because next week the Federal Reserve is going to announce something, or you think that, maybe this announcement will cause it to go down and up. I mean, some people might be good at doing that sort of thing, but I wouldn't know how to do it. I will just buy it, and if the question becomes, do I buy silver, do I buy gold? That's where you would look at the gold and silver ratio to see how expensive or cheap they are relative to each other, and buy whatever is cheaper. So right now that would be silver, and buy it. But I would not time it, because the risk of doing that. I've seen so many people, including Jim Rogers. Jim Rogers was
Mm.
saying, "Well, wait until gold is going to fall back to $900 to buy." Um, but it just never went down to 900. Now it's 2050 or so, and might be going higher. You can try and time it, but you might be wrong. And I think I like to look at the longer term trends, buy it, and not look at the price daily as much. Just kind of keep it long term and see how things play out.
Okay, other question we have for you, and we touched on this hyperinflation. I mean, what would it be like if the world's reserve currency went into hyperinflation? I mean, we can ask what happens to foreign investors holding U.S. treasuries, holding U.S. dollars, and we can also ask what happens to U.S. citizens who are exclusively in U.S. dollars. Where does the world go when the world's reserve currency starts to go into hyperinflation? Where do we go to?
Well, I mean, everybody would like to know the answer to that. It's the real answer. I mean, we can make some assumptions, or we can look through history a little bit. If you're living in a country which is experiencing hyperinflation, what it means is it's good to have debt. I mean, if you have a home and you have a mortgage, and that mortgage, especially if it's a fixed interest mortgage, that's what you want, fixed interest. Then if your currency starts depreciating very quickly, or even goes into hyperinflation, I mean, you can pay off your mortgage with a day's worth of work, right, of wage. That's what happened in hyperinflation Germany back then. So in a sense, the people who borrowed money are going to get a free pass. Now, the people who saved their money in US dollars, they're going to be wiped out. So that's one thing that you have to look at and realize. Um, Again, which is why you want to get rid of your US dollars and put it in a safe have an asset like gold and silver. Now, what you also have to look at is essentially it will become very expensive to get foreign goods. So all those Chinese goods, all these Walmart goods that are being sold right now, which basically cost the US dollar to stay so valuable, because the Chinese just produce these goods so much cheaper everybody else can, and in such quantity that basically it kept the value of the US dollar very high. Um, Now, if that confidence in the US dollars is crashing, you're going to have a reversal of that. Suddenly, Chinese goods are going to become extremely expensive, which means that whatever is being sold at Walmart is going to be so much more expensive than what it is now. So your purchasing power is going to fall drastically.
Now, longer term, that would mean that people are going to start making shirts again in the United States instead of having them come from China, or maybe shirts from the United States are going to be sold in China in the future. These are all things that can happen because essentially there is that readjustments of these currencies. Now, in order for production to switch, that takes a long time, and it's probably unlikely that we're going to have garments made in the United States, but you're definitely going to see a number of industries coming back to the United States because it's just cheaper. But that's assuming that you have a stable government. If you have instabilities, and that might not come back to the United States until you have stability. But overall, I guess it will make exports a lot bigger, and it will drastically reduce imports. It will make the quality of life for most Americans a lot worse than it is now. Again, you can protect yourself by buying gold or silver because that value is going to shoot up, very, very quickly in dollar terms, because gold will continue to be accepted as a very valuable way of paying for something. So you can basically protect yourself by doing that. So I also think that wealth might not be destroyed. Wealth is shifting somewhere else. So that wealth is now going to go into gold and silver, and it's going to go into alternative currencies. If a foreign country is holding dollar reserves and the US dollar is starting to crash, they're probably going to look for some other place to put it. And again, they might be trying to get gold and silver, but they'll probably be trying to get euros, or they might be getting Swiss francs, Singapore dollars. They might even trying to be getting the Chinese yuan. So they're going to go into other currencies which are going to be perceived as stable stores of values. And we'll see how it goes. But during those times, all kind of things can happen. And remember, in hyperinflation Germany, that's what sets it up. We set the world up for World War III. So I'm hoping we're not going to go that bad in a direction like that. But it's going to be ugly. That's what I would think. And the hope is for things not to happen too suddenly. So hope is that it's going to be a more of a gradual sort of process.
Yeah, some of the fears or concerns people have if hyperinflation should set in is capital controls. But as I was saying, for people who are in the U.S. and exclusively deal in U.S. dollars, and let's say capital controls do come into effect, uh, do you think people really understand what that means? And at that point, would it be a bit too late for them to move over into silver and gold?
I think that in practice, not on paper, but in practice, the United States already has a bunch of capital controls. Because I was talking with my friend who lives in the US right now, and we're talking about they were trying to wire some money into Australian dollars, and I told them, well, just open up a multi-currency account and keep your Australian dollars in it. And he basically told me, well, we don't really have multi-currency accounts in the United States. Normally, when you go to a bank, your only choice as a standard customer seems to be to get a US dollar account. Here in Singapore, for example, I can go to DBS Bank and I can get an account where I have one account number and I have 12 currencies in it. And somebody can send me Thai baht or Australian dollars or Canadian dollars or US dollars, and they don't get converted. They just stay in my balances. So I have all these balances, and I can easily switch between them. But if you're a US citizen, your bank probably only lets you have US dollars. So I remember when I was back in living in California, that was back in I came back to California back in 2006 or something, and I went to a Bank of America branch, and I needed to exchange some euros back to the US dollars. And this was like 6 or 7 years after the euro came to be.
the guys at the Bank of America branch, they didn't know what the euro was. So what I'm essentially saying is, in the United States, it's very hard, you know, for normal standard people to actually have other currencies. Um, so, and there's also, if you move metals right now, the banks or money, the bank is going to ask you a lot of questions, and sometimes they just don't let you do that wire transfer for whatever reason. They might call it AML KYC or other reasons, but the banks nowadays seem to think that they can tell you what to do with your money. And as soon as a bank is telling you cannot do the wire transfer, in my book, that's a capital control, or that's akin to a capital control. So I don't think it's a black and white thing that, one day we don't have any, one day we have some. There might be some official one coming, but I think it's more a matter of that proverbial frog slowly being boiled alive. It's just getting so much harder for you, a citizen, now to open a bank account offshore because of FATCA and all the other reporting requirements, and the United States making that bank responsible for the customer not paying the taxes. And so many banks don't want to have US citizens as customers because Uncle Sam is going to go after them for any little issue. And essentially, that makes it difficult for US citizens to open bank accounts in foreign countries. So I kind of see that as a form of capital control. So it's really a gray sort of, not a black and white sort of thing. And if you have not done so as a US citizen, I think you should try to get some of your assets and put it in another trusted jurisdiction outside the United States, because I believe this is going to be more difficult. And just for you to understand, I myself, I used to be a German citizen. I lived in the United States for 12 years. So I know the United States well. All my education is US based. In Germany, we get taxed on residency. American citizens, they're taxed on citizenship, meaning that if you're a US citizen and you're paying, let's say, 35% in taxes on average, and you're moving to Singapore, where maybe you'd only be paying 10% normally, because you're a citizen, you have to pay additional taxes to the United States. Now, it might not be, they will look at the tax you pay in Singapore, deduct, say, from 35, deduct 10%, but a big portion of that 25%, you're going to have to pay to the United States just because you're a US citizen, regardless where you're going to go. If you're a German citizen or a European anywhere, then if I leave Germany, I don't have to pay German taxes. If I go to Singapore, I'm just going to pay that 10%, regardless of what the tax rate is in Germany. But I do believe that Europe as a whole, because Europe is also, spending money which Europe doesn't have, and there's many other issues in Europe. So for the last 40 years, we've been accumulating debt and debt and debt in Europe. So I think Europe is going to do the same things the United States is doing now, and is going to say that any European citizen is going to have to pay taxes based on his citizenship rather than residency, because so many Europeans and Germans have left Germany to go work somewhere else. And when I was working in Germany, once I add up all of my taxes, including the pension system, which is basically going to bankrupt anyway, so I don't expect to get anything, I was paying in real terms close to 80% in taxes. That's why I ended up leaving Germany, because it was just completely nuts. So I ended up getting Singapore citizenship now, which is not easy to get. It's probably one of the best passports you can have for traveling. But I gave up the German citizenship in order to protect myself from this coming change, where I believe that Europe is going to switch to worldwide taxation. And this is just a trend that we are seeing in the world now, because all these governments are spending so much more money that they have. And people, they don't want people to just choose freely where it is they want to go and live. And so it's being made harder and harder. And I chose freedom by proactively essentially give up my German citizenship because I'm seeing what's coming. And that's my personal decision. But that gives you an idea of the type of issues, because I'm always seeing U.S. citizens basically, once they leave the United States and they try to live somewhere else, they're having a hard time getting insurances. They're having a hard time getting bank accounts. They're having a hard time getting all these other things because Uncle Sam with FATCA and all these other laws basically are hounding these foreign banks and making it difficult and unattractive to have U.S. customers. And these are all ways in which you basically end up getting sucked into the system and not being allowed to leave. So in my books, these are all forms of capital control already.
Yeah, it's a good point. As an example, I remember I was going to go ahead and open up a bank account, and I called on the phone, and they told me it was, I forget if it was 1,500 or 3,000 to open up a bank account. And when I got down there and showed them my U.S. passport, all of a sudden it became 8,000 to open up that bank account. So it is pretty rough if you're a U.S. citizen overseas. But I want to ask you about taxes. What is the rest of the world, or how are they going to look at the US once they really see that the taxes that the government takes in barely scratches the surface of the interest compared to pay for all of the debt that the US is taking on right now?
People just ignore it. It's not a matter of what makes sense, or of thinking through these consequences. Um, there, if you are interested in economics, there is this theory in economics, of efficient markets. And the basic idea, when you build these econometric models and you try to use numbers to come up with some, so typically or traditionally, you make this assumption that everybody knows everything about everybody and everybody makes rational decisions. And if you look at the real world, it's nowhere like this. I mean, that's why we had the subprime crisis, right? I mean, if you look at it in retrospect, and even during the time, I mean, it was so obvious that this is a huge bubble, and yet everybody was in it because I think of two reasons. A, there was an interest for them to keep it going. Uh, and as long as things explode and other people get hurt, or other, then they just keep on doing it. And another important point is people have a very strong normalcy bias. And what that means is that people always assume that today is going to, or tomorrow is going to be the same way as it is today, and that things are not going to change. And so if the United States printed, $1 trillion last year, and this year is printing $2 trillion, why should it be any different? Nothing went wrong last year. So assuming it's okay this year too, and if next year they're going to print $4 trillion, which is what we're going to be doing this year, then it ought to be fine too. It's not been a problem before. Why should it be a problem now? And in the meantime, bankers or other people are going to keep on doing their normal job, and they just assume if the government needs more money, they're just going to print more money. And in the meantime, politicians are going to try to lower taxes or give other goodies away again or increase spending again to be reelected. Because, say, as I pointed out, in some other posts, the only country I found, and I lived in Germany, Italy, United States. I did 2 trips around the world, and I'm quite, internationally from a disposition. The only country I found worldwide so far where I truly felt that the government is not just doing what's best for the next election, but is truly doing what's best for its people long term is Singapore, which is why I moved here. It's just amazingly well-run government here, and it's sort of the exception to, all these people which think that government can only be inefficient and bad. Governments can be very good if you organize it well and you put in competition and other things. And there is this book called From Third World to First World by Lee Kuan Yew, which was the Prime Minister of Singapore for many years, and he's basically the father of Singapore. And in it is almost like an instruction manual on how to build efficient government. And I read that book, and because of that book, I moved to Singapore, and I'm so happy I did. So governments, don't have to be this way. It's just that in the Western world, Europe and the United States, we've just got accustomed to borrowing from the future, spending money we don't have, and leaving all the debt to our kids because the politician can just say, that's not going to be my problem. I just want to do what's popular today and spend that money, and just the next guy is going to do the same thing until the whole thing is going to crash and burn, essentially. And that's what's so upsetting about our political system in the West. Um, so, not every place is like this. So um, I think we just have to go through the cycle. I think we are going to have to go through the crash and burn. And unfortunately, the longer this has gone on, the worse the crash is going to be. But once we go through that, things are going to change, and hopefully, they're going to change for the better again, where we are going to start having more sensible policies and governments coming in. But that transition is going to be painful. And again, that's why I went into precious metals. I did not go into precious metals because I love gold and silver intrinsically and think it's the best thing ever and try to convince people to buy gold and silver because I'm in the business. I went into gold and silver because on current world events and where we are heading, it is probably one of the best things you can buy. And we felt that we have to make sure that we can store that gold and silver in a systemically safe way, because I think that's not being done very well nowadays with the way gold and silver is stored in most places.
Yeah, here you have to agree with that also. Um, Silver Bullion's principles as a company, since we're touching on that now, I understand it's always long metals, and we definitely do put our money where our mouth is, and we kind of are a company of gold and silver bucks. Everybody has their bits of gold and silver there. But can you talk about why this is important for investors to know the principles of the companies that they support?
Well, what is important, I think, when you deal with a counterparty who's storing gold for you or where you're buying it, but especially if you store it, is how likely they are to for something bad to happen to them. And so that basically means how strong are they financially. But it also means how is your gold stored? Because what is very common in this industry is that when you are buying, say, some gold or some silver, whoever you're buying it from, they're not going to give you the serial numbers of the golds that you're buying, or they're not going to put in a tamper evident bag if you're buying, a Maple Leaf Monster box with a unique ID and sell you that specific box or that specific bar. Instead, they're going to tell you that you now have 500 maple leaves without identifying them, or say you have 500 ounces of silver or something like this. And what that means is that gold and silver is on their balance sheet, and they owe you that gold and silver. It's not yours. It's something that they owe you. So if they go bankrupt, you might never see that gold and silver. So um, that's not how we do it, because I think we build silver bullion and our storage systems to be in the interest of the customer and to be as transparent as possible, because I'm the first customer essentially, and I want it built the way I think it should be built, not the way it's the most convenient for us. And what that means is the only way we store gold and silver for customers is by selling the gold or silver bar as a whole unit to them with an invoice. And you have to understand, an invoice is a legal document within the jurisdiction you're operating in, which will be Singapore in this case, that this specific bar by serial number is now your legal title property, it's your private property, and it's no longer on the balance sheet of Silver Bullion. And we, if we store it for you, we are just acting as an agent who stores it for you, who insures it and provides liquidity, or gives you an option of collateralizing it yourself. But it is yours. And because it is legally yours, we cannot do funny things which are very common in the industry. To give you an example, if you are getting your metal by quantity instead of serial number, essentially that means that a dealer does not necessarily have to keep the same metals there. You don't really know if that monster box is really in the inventory or not.
Yeah.
And even if it is, he might be selling it to somebody else and ordering some new metal and just give you some metal later for it to replace it. Now, that dealer might use all of that inventory, all of that bullion stored for their clients, basically as their own inventory. So what you're doing is you're financing the inventory of the dealer, and that's very common. Or they might go a step further, and if you are storing a large amount of gold and silver, you can actually lease that out to a third party. Like for example, you could lease it out to a gold mine, because the gold mine might say, I'm leasing that amount of gold, and since I'm a gold mine, don't worry, in 5 years time I'm paying you back all that gold anyway because I'm mining it. And that gold mine might take that gold and sell it in the open market in order to get financing to then expand the operations. That's called gold leasing. And again, it sounds terrible, but it's actually a legal thing if the gold that you're holding is yours, it's on your balance sheet. And remember, if all you have, all you're owing the customer is a bunch of gold and silver, which is on your balance sheet, it's actually the dealer's gold, and that can be used for all these different purposes. And even if it's just used for inventory, well, if you're going to have a crisis and you cannot get any gold, people might rush to buy that gold and you might not have any gold left, and then your storage customers are left hanging dry, right? So that's why, I've always been rolling on that same drum, saying that if you're storing gold somewhere, make sure you're getting the serial numbers of the gold you're storing and have some sort of proof and some sort of third-party audit that gold is indeed there, and you have an invoice, not a statement. A statement is just somebody telling you that they owe you some metal. An invoice is a legal document saying that that specific gold bar with a serial number is now under your possession. Now, some goods don't have serial numbers, like Maple Leaf Monster Box, for example. But if it's being stored anywhere, then it should be in a tamper-evident bag with a unique serial number and tracked by that bag, which is what you can do in lieu of a serial number. So once you have that, then you're really a legal title owner of that bullion. And that's extremely important, because once you have that, you don't have to worry nearly as much of that company going bankrupt, because the creditors of that company cannot touch your gold. So that's how we operate. But on top of that, of course, you still want to make sure that bullion dealer or vault or entity is viable from a financial point of view. So in our case, I started Silver Bullion with my own money. We've pretty much been growing it organically. I never took a loan from a bank. So Silver Bullion has zero debt. Even so, when you talk with other finance people, they would normally tell me that Silver Bullion is so inefficient, because what I ought to be doing is to take a lot of loans to leverage on my gold holdings by buying future contracts, and I should be taking all the money out of Silver Bullion and use it for something else, probably buying stocks or whatever it is they think I should be doing with it. But I'm not doing any of that. What I'm doing is whatever money is in Silver Bullion, almost all of it is staying in Silver Bullion, and we are just buying more metal with it, because I'm looking at Silver Bullion as a way to essentially store metal, and whenever we can sell something, we take whatever net gross profit we have and we essentially buy more metal with it. So over time, we keep on increasing our metal holdings. And people might say, oh, it's risky to have a long position in gold and silver. But because we have no debt and we use no leverage, we are all owning that gold and silver outright. And so the inventories that Silver Bullion has truly is the company's inventory, it's not the customer's inventory. And right now we have about 550,000 ounces of silver. It's about more than 500,000 ounces. And we have about 3,000 ounces of gold. So when silver went from $12 up to 30, you can do the math that that's been very good for us. But if gold falls back or silver falls back from $30 back to 12, then we're gonna losing some money temporarily in the sense that our silver holding value is going back down. But for us, it just means that it's going to be a cheap time to buy more silver, because ultimately you have to look at things this way. If you hold US dollars or Singapore dollars or any other currency, fiat currency in the world,
Yeah.
that is a depreciating asset. On average, the US dollar is going to fall in value 4.2% per year. That's according to official statistic by the Department of Labor. And the way I'm calculating this is I'm looking at what the United States dollar was back in 1913 and how much purchasing power you have left nowadays. And you will find that 98% of that purchasing power is gone. And if you multiply that out, that turns out to be an average loss of purchasing power of 4.2% per year. And gold, I'm sorry, not 4.2, 3.2%. Gold, on the other hand, has appreciated 4.2% per year over that time period. So clearly, currencies which are being printed at record amounts now are depreciating assets. You're guaranteed to lose wealth if you hold currencies, because your $100 today are going to be worth quite a lot less in next year. And if you're holding gold, chances are that gold is going to be worth more next year compared to now. So if you're a company and you're holding, what are you supposed to hold? US dollars or gold or silver? Well, obviously I want to hold gold or silver. So, and that's basically our philosophy. And it's basically what we are saying, let's say, preaching, about why gold and silver, or explaining why gold and silver is a good investment. That's what we are doing with the company. And I've never sold shares in the company to raise money. I sold shares in the company in order to get other similar-minded people on board, which have skills, which have, abilities, and for other reasons. And as you know, most people at Silver Bullion who are working at Silver Bullion, they also have shares in Silver Bullion. So, that's where the value of selling the shares are. But our philosophy is essentially to keep on being long on gold and silver because it just makes sense to be long of it. So I guess you can say that we talk the talk, but we also walk the walk in that regard. And right now we have, in US dollar terms, probably $20 million in net assets in the company with no debt, and we have enough income from storage that we can run the company without needing to have any sales. And what that means essentially is that we are an extraordinarily strong company. And on top of that, if you store gold with us, it's not on our balance sheet. So you don't even have to worry about, us going, losing that gold if something happens to us. And maybe lastly, in Singapore, and you might all know Singapore has pretty strong laws. They don't have many, but they enforce what they have. Falsifying an invoice is a criminal offense. It's not a civic offense. So again, I think you're very well protected by the Singapore government, to keep us from doing anything funny.
Okay. Um, I gotta ask this question because I see a pretty good debate going on in the comment section. What's your opinion on Bitcoin? And mainly because we see gold and silver guys, they prefer gold and silver. Bitcoin guys, they prefer crypto, and sometimes there's just a divide between the two. There's no bridge for them to cross. So I'm watching this debate going on. But what's your opinion on things like gold and crypto?
Um, I, 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 the reason why I started silver bullion was because I basically thought the financial system is we need an alternative to the financial system. And Bitcoin came out in early 2009 and so on. And when you look at the creator of it, and I did a little bit of research on it, I'm pretty sure that the creator, we don't know who it is, but I'm pretty sure that he has a financial background and that he has been just as disgusted with the way the financial system was and is that I was. And he had the technical expertise and the inspiration and the know-how to actually build the first blockchain with a proof of work system, which is basically what makes it so unique, and makes it so unique that you can take bitcoins and send it to somebody else and be assured that you will not be able to create more bitcoins. It's not that something you can do a control copy paste. So I think that it's a fantastic invention. I think it's, the problem that we have in our financial system is there is way too much centralization. The banks are way too powerful, and these things are all made worse because of Swift wire transfer system. Meaning that what most people don't realize is if it's not that hard to make a bank. I have a friend who made his own bank. The problem is that once you make a bank, and you might even be getting a Fed account and so on, is that you can only make a wire transfer and send money to somebody else if you have what's called a correspondent bank account, meaning that another bank has to accept payments from you. And if that bank doesn't want to accept payment from you, they're not going to accept it. And so what that means is the big banks, they can control the small banks by saying, I kind of feel that your AML KYC is not that good. Like I think maybe some of your customers might be terrorists, so I'm going to close your correspondent accounts. You can no longer use me to wire money. And once all of these once a bank has no correspondent bank accounts left, they can no longer wire money in and out. And if a bank cannot wire money in and out, they cease to be useful. So basically, the bank is going to have to go out of business. So when we talk about the too big to fail problem about banks, the existing financial system is just making it worse and worse. The big banks are just becoming bigger and bigger, and they're killing off the small banks. And these banks all thrive on centralization. And if you take Bitcoin or you take blockchain, you take cryptos, they are the opposite of that. It's all about decentralization. And the best way I can explain it is if you want to make a bank account, you have to go to the bank. You have to give them all the documents and so on. And if they like you, they're going to give you a bank account number. And then they ask you to come up with a password to basically protect yourself and be able to make transactions to make sure it's you. Bitcoin is the opposite. With Bitcoin, there is no bank to go to. There is no Bitcoin company to go to. That's why it's decentralized. What you do instead is you come up with a password first. And then through a bunch of mathematical formulas and algorithm, from that password you created, you get an account number equivalent. Now in the Bitcoin world, that account number is not called account number, it's called an address. And that password is not called a password, it's called a private key. But essentially that's what it is. And so anybody can make their own, let's say, bank accounts by just coming up with a password and running it through a Bitcoin algorithm. And all of these algorithms are the source code is made public, meaning anybody can see, who knows how to read this stuff, what's happening step by step. And because you can see everything, it's no longer a matter of having to trust somebody. It is simple mathematics. And that's why the blockchain is called a trustless system, because you don't have to trust the banker, and you don't have a banker in the first place. And so I think that crypto are, it's one of the most important innovations, I think, of the century. And the reason why crypto is not where it should be is because there is a huge effort by banks to prevent blockchains and crypto from going anywhere. Because if you are trying to convert bitcoins into US dollars, and a bank knows that you're a company which is providing conversions, they're most likely going to close a bank account of your company. And because the very concept of a distributed ledger system like Bitcoin is basically making banks obsolete. And what's important for people to know is that central banks and banks are two different things. A central bank is not necessarily against crypto, because central banks are also worried about the increased centralization of these banks, and they cannot control banks, completely. So central banks and different countries are different, of course. But I mean, Singapore, for example, is trying to become a fintech hub and is really, quite frankly, quite friendly to cryptos in general. And I'm talking about the Singapore government and the Singapore Central Bank, which is called MAS. But Singapore banks are very much against crypto because, like all banks, it is a long-term existential threat for the banks. And so I do not think that Bitcoin and gold are competitors, or that it's going to be either gold or Bitcoin. I think that they two are complementing each other, because gold is still something that in one way or another everybody's going to accept. You can take gold and you go into Laos or Vietnam or Africa or anywhere else, and you might not be getting the best price, but that gold is going to be valuable. So it is the ultimate form of portable money. But it is physical. So it has advantages of being physical, but being physical, you have to store it somewhere, and so on and so on. And then you have Bitcoin. And Bitcoin, because you will only have 21 million Bitcoins ever to be produced, and because every 4 years or so, the amount of new Bitcoins that's being created is halved, and because many people have lost their passwords, their private keys, and can no longer access their balances, Bitcoin is actually a highly deflationary unit, meaning that there's really less and less of it. So it's the opposite of a fiat currency, which means that over time it is most likely going to become more and more valuable. Ultimately, people are saying, well, there's nothing behind Bitcoin, so why does it have any value at all? Well, it's the same reason why the US dollar has value. There's nothing behind the US dollar but the trust people have in it. But if you ask me, do I trust the US dollar more, which is being printed at incredibly high amounts right now, and or do I trust Bitcoin more, where I mathematically know that there will be less and less of it over time because people lose these private keys and the value is going to go up, then of course I will prefer Bitcoin over US dollars. Now, do I prefer US dollars over Bitcoin over gold, or the other way around? I have some of both, to be honest. I have more precious metals right now. I don't have that much Bitcoin right now. But I definitely think that Bitcoin is something that people which should keep an open mind about, and should consider buying a tiny amount of it. You can buy $5 worth of Bitcoin, and why not? Why don't try it? Why don't get a little bit more familiar with it? And as you might know, we have we believe the biggest problems that we have in the crypto space is banks basically trying to prevent liquidity between Bitcoin and US dollars or other currencies. And that's why we've been creating a new company, which is separate from Silver Bullion, which is called Cash, which essentially has been working on creating a gold token, which is using a similar blockchain to what Bitcoin is using. It's the Ethereum ERC20 type of token. And essentially, it allows you to have a unit of account, which is a token, which is really tradable, just like Bitcoin. And you can convert it into physical gold. And what's different about the way we did it is that we are actually licensed to do it by the Singapore government. So it's something that has a clear regulatory background. It also is using an asset tracking system, which I mostly developed, which I basically the last 10 years of building tracking systems at Silver Bullion, because my background is software development. I used that to build a tracking system called Chain, which essentially allows gold and silver to be stored in different vaults around the world, but still get photos of it and have a lot of other information, have these data hashed and sent to another blockchain in order to make sure it's there, and basically create a very transparent and very strong proof that gold is there to back those tokens. And people can take these tokens, can make an account with Cash, and can redeem their gold tokens back into physical gold. And right now we have gold stored in dollars with Still Engage, which Still Engage also bought into this company Cash. We have stored some gold here in Singapore at Loomis, as well as at the Safe House. Prince is also signed a contract to essentially set up the system. And this chain system involves RFID chips, it uses specialized trackers that we do, tamper evident bags, and so on. And you can find out more about it if you go to cash.gold. But essentially, to get back to your question, I think both Bitcoin and gold are things that people should consider as a better alternative to the US dollar. And we believe that if we're able to combine the benefits of these two and make it easy for people to go between gold and Bitcoin with, for example, this tokens that we've been developing, which is now, by the way, traded on the BitHub, and we're announcing another exchange tomorrow, actually, where it's going to be traded, then that's a good thing. So I think both the gold community and the Bitcoin community, ought to be working together, not
Yeah,
against each other.
yeah, I completely agree. I think both are good to have, and they definitely can complement each other. Gregor Gregersen, I know your work is starting. Any last thoughts before we wrap up? Anything else you want to say?
No, I think I've already talked a lot. So I would say, if you're not sure about buying gold and silver, um, read about Ray Dalio. Ray Dalio is probably the most successful hedge fund manager in history. I've been reading his books, and I'm really impressed by him. And he recently said, "Cash is trash. US dollars is trash." And what he means with that is, don't keep all your money in US dollars. Don't keep it in bonds. If you do, take it and buy something else with it. Buy gold and silver, or if you're so inclined, buy Bitcoin with it. Diversify out of being inside the system, because things are going to get worse and worse, and it will pay off later for you to diversify out of it. And don't just take my word for it. Listen to Ray Dalio, because he has so much wealth and expertise. And when he tells you that it's time, we should definitely listen to him.
Okay, Gregor Gregersen, we thank you for stopping by. I think it was a pretty interesting and enlightening live stream. You gave a lot of good info, and I hope this is something that people out there can use. So we thank you for stopping by. buy again. And that's pretty much going to wrap up this live stream. I thank you guys for participating with comments. There were pretty good comments out there, pretty good debate between crypto, gold, and silver that we saw there. So, hope we'll see you guys again next week. And until then, as always, make sure that you take care of each other, saddle up for what's coming ahead, and silver up. We'll see you next week. Take care.
Take care.